on the consumer from two key retailers. Macy's trading higher after an earnings beat, while shares of home improvement retailer Lowe's are lower despite beating on earnings. The CEOs of both companies still expressing some caution about the consumer, and here to make sense of it all is Melissa Repko, retail and consumer reporter for CNBC.com. Melissa, welcome. Why don't you dance us through both Lowe's and Macy's numbers, and then we'll start cross-examining.
Sounds good. So with Lowe's, we heard much of the same that we heard from Home Depot, which is that it's a tougher environment to persuade people to do DIY projects. People are just not doing those kinds of home projects or buying big ticket items like outdoor grills and patio sets because of a combination of inflation and interest rates. For Macy's, they put up decent results, but they are trying to turn around the company. And so much of their call, they not only spoke about this challenging consumer environment, they also spoke about progress they're trying to make as they look towards the future.
As we look at these numbers, I'm always struck by a couple of things. Traders may love the fact that numbers beat the estimates, whatever the forecasts were. And in a couple of these cases here, for Lowe's, they beat on earnings and on revenues. In Macy's case, I forget, they beat on one and fell short on another.
Yes, Macy's, they were just about in line, a little bit shy.
But what really matters to an investor is whether profits are growing, correct? Yes. And in neither case are profits growing.
Nor are sales. If you look at year-ago sales, both of their sales fell.
Both their sales fell. So what does that tell you about these businesses?
It definitely tells you this is a tougher environment. I spoke to CEO Marvin Ellison of Lowe's, and he said, interest rates can go down, but then you still need consumer confidence to go up. And so he's talking about kind of the hard-to-measure things that people still feel price fatigue. Even as we're seeing some relief with the numbers, the CPI numbers, that doesn't mean people are seeing those grocery prices or housing prices or dining out prices go down. And so, yes, they think twice about making purchases, and that's a reality with anyone who's selling discretionary goods.
Macy's, if I'm reading correctly, is banking on a big turnaround that will mean that the Macy's brand will be much smaller. Yes. But more profitable, presumably?
That is the hope.
That's the idea.
One of the things that Macy's did today that was very interesting is it teased out the stores it's closing, which are the underperformers, from the ones that are doing better. So it is planning to close about 150 stores, and it broke out how its same-store sales did at the stores that it will keep open, and those did better. And it also looked at the first 50 stores it invested in and talked about some of the strategies it's doing. So I spoke to CEO Tony Spring, and he said at these first 50 stores, it's getting kind of back to basics. It's adding more employees to the sales floor. It's adding new brands. It's expanding popular ones. It's doing things like special events that drive people to stores, fashion shows, personal styling, things to get more customer traffic. And again, yes, this is a tougher environment, but what Tony was saying is that they're trying to move the needle with their own strategy, even in this tougher backdrop.
Give them credit. And this is a tough one.
Yeah. But it sounds like Macy's is going to a higher touch kind of model in the stores that are succeeding. I mean, what a concept. Put more people on the sales floor to take care of you and check you out. I
thought we couldn't afford that anymore. Technology was replacing that and all of this stuff.
He actually joked about that on the phone with me. He said, I wish I had some brilliant strategy, but it's a lot back to retail basics. It's fixing the things that are the same old strategies for success, but he acknowledged that Macy's has fallen short, and that's what's driving some of its customers to places like TJ Maxx.
Well, they'll have to make sure it's profitable in the long run. It's easy to start saying, we'll put more people on the floor and comp sales are up. But if their profits can't rise more than the cost of labor and putting on all of these events, it's not necessarily going to leave them in any better shape.
Exactly. He did mention that the average ticket at those first 50 stores has gone up. So if by that high-touch experience, people walk out with a luxury handbag or multiple makeup items, maybe that can justify the extra staffing.
And when will these store closings take effect? Are they immediate or are they phasing over several years?
They're phasing them in. So they are planning to do about 50 per year. And they will.
And how many total, you said?
About 150. So 50 over the next 3 years, it will leave them with 350. And at the same time, they are growing two other brands. Their beauty brand, Blue Mercury, and Bloomingdale's, which are the stronger performers of the three.
There you go.
There you go. All right, Melissa, thank you very much.
Thank you.
Always good to see you.